WALTON, Senior Advisor, Global Risk and Resilience, Anca DRAGU, Governor of the National Bank of Moldova, and Bogdan CERNESCU, Managing Director, Head of Corporate Banking, Romanian Commercial Bank, are invited on stage. We have 50 minutes or 45 minutes at our disposal, so we can kickstart our discussion related to investments and the current economic situation. This is why I want to start by asking everyone one first question. How do you find the current economic situation? How do you find this
crisis, Ukraine, Middle East, Trump, and so on? And not forget Europe.
No, I won't forget Europe at all. So as you can hear from my accent, it's a bit blended and blurred itself. So I was born and raised in the United States, but I spent really all of my adult life abroad. I'm half American, half British, and I'm actually half Slovak, if that's possible. So that is my relationship to the CEE region. I've been in capital markets actually for all of my career. I focused on emerging markets and on the CEE as well, including Southeast Asia when the big boom was happening in the 90s. How I see the global geopolitical, geoeconomic crisis right now, specifically for investors, and the convergence of economic policy and security policy, I see this as a valuation opportunity for investors. And I was looking today when I was making my notes, or what are the risks and what are the opportunities, because this was the title of today's panel discussion. And I think that there's a convergence of both of those two. I think that they are often one of the same thing. And it's really for investors, it's a matter of pricing risk. And I think actually the CE market is really mispriced and underpriced. Risk is not actually the enemy. Failure to price risk is the enemy. And lack of information to be able to do that effectively is where that fails. I would say, given my time in institutional investment, I would say those risk models that were deployed prior, say, to the last 3 or 4 years, those risk models really didn't do the greatest job and are no longer capturing the whole picture for geopolitical and these economic risks. One thing I think that's very missing is hybrid warfare risk, and that is actually not priced into these models. And I mean infrastructure sabotage, sanction, contagion, and supply chain risks, cyber economic warfare, and cognitive warfare. This is no longer a tail risk, it's a baseline operating condition. But there's actually a lot of room for growth and hope. The CEE economy itself, I believe, should not be valued on consumer growth. It's really being undervalued for its geostrategic infrastructure positioning. And you asked me about the war in Ukraine, and I think this is very important for the CEE region. When we move into the reconstruction period for Ukraine, the insurers will be able to come in and underwrite business risk. There'll be a lot of private equity and a lot of private capital coming in and blended capital helping that. I mean, estimates have been 550 billion to $1 trillion, even up to $2 trillion coming into that region. And the CEE and Romania in particular are very, very well positioned to take advantage of this. So the CEE's industrial production, and I was really shocked at this figure, is 15% of GDP versus 8 to 9% in the US and the UK. So once that reconstruction finance begins to come in and mobilize, the geo-industrial positioning of the CEE puts it in a really, really good place to take advantage of that. That's really my points for right now, and maybe I can address other things a little bit later.
Sure. You add the comments. Anca? Mulțumesc.
The current economic situation, it's more complicated than a year ago, of course, and especially it's complicated for central banks. Allow me to speak as a central banker, as governor of a central bank. And what we have seen recently, it's this new wave of price increase, the new shock from energy prices. And we have already seen several central banks that have already increased policy rate. Also, Central Bank of Moldova increased policy rate last week. But for investors, that's very important to have a safe environment. Safe and financial stability and low inflation. So for investors, the current economic environment, I would say it's not the best option for investors. Actually, it's not the preferred one. And higher uncertainties would require higher yields. So this is what we have to expect, that investors in the region would require higher yields nowadays, especially in the context of increasing inflation in most of the countries, I may say. So. From the point of view of central banker, our strategy and our priority now is to ensure to contain the worst effects of energy shock, the worst effects on crisis, so on prices, to make sure that that inflation is somehow kept under control, and also to ensure financial stability, which means that for the financial sector, the risks are known, are estimated and forecasted, and also kept under control. Financial stability issues would be very negative message for investors, because also it would show that authorities are not able to deal with current shocks. Okay, we have shocks and we have this crisis. We have now this new word, perma crisis. We've been through different crises over the last few years, so we are more or less used with very specific environment, yes. But the idea is that authorities, either central banks or regulators of financial market or governments, are handling the situation, are managing the situation, so that the message to investors is a positive one. Yes, we have all of us, we are facing these difficulties. We are under dire times, but the difference is the reaction of the authorities. And then we will see at the end of the day, and we saw last year, we saw in the previous years, that some countries were more successful in attracting investments, and I'm not talking only about foreign investors, but also domestic local investors. And in this field, I may say that, let me say a few words about Moldova, that last year we saw in Moldova an increase by 20% of investments, which means that...
Foreign investment or in general?
In general.
In general.
All together. Which means that despite the fact that we are at the border with the war, that we are not EU member, not member of NATO, it means that the policy mix and the measures taken by the government and also the regulators of financial sector were well received by the markets, so that consolidated the trust of investors.
Before I pass to Bogdan, Romania is in recession, okay? And what about the economic situation in Moldova? Anca?
In terms of growth, economic growth,
yeah.
we had last year a very good year in terms of economic growth, which reached around 2.5%. That's a significant number if we look at the region.
Compared with Romanian, of course.
But also for some other countries, there were some difficult years. Moldova was significantly hit in 2022. It was the combination of energy shock, of course, the proximity of unjustified war, Russian war in Ukraine. And so 2022, it was a minus 4.6% economic growth. Then situation started to calm down. 2024, we had a very mild positive 0.1. So it's just the signal that you can make it. And 2025, we had this 2.5%. Of course, in the context of a good agriculture year, but also diminished perception regarding the risk for Moldova. And for this year, yes, it's around 2%. We had our estimation, central bank, we don't do really forecasting, but we see a little bit above 2%. There were already some downgrades here for economic growth from 2.7 to 2.5, 2.2, but around 2% for this year, which it is encouraging, but also we do benefit of this growth plan. It's signed with the European Union. It's something similar with the National Recovery and Resilience Program for EU member states. And the value of this program is over 10% of last year's GDP, for example, so it's 1.9 billion euros. And this is a combination of investments and reforms that is going to boost potential output and also real output. So we are going to see in 2-3 years' time this growth getting higher, and there also potential GDP going higher.
Thank you. Bogdan, current situation, how you see, you are a banker, how you assess the risk in this environment?
You know that we have our joke that we in banks are paid to be optimistic.
Are paid to be optimistic?
Otherwise we wouldn't lend money.
Do you have a job?
Yeah, we should believe that tomorrow is going to be better than today, otherwise we wouldn't get our money back plus interest. But nevertheless, it's not the perfect situation in economy. Whenever Romania grows below 3 to 4% in terms of GDP growth per year, it's clear that there are some headwinds in the economy. We still see capital inflows and investment going, but we see also a bifurcation. Capital goes to bigger projects, strategic projects, even state-sponsored projects, and we see a sluggish development in the mid-corp and SME area. And interestingly enough, it goes the same also for the EU funds, because normally bigger companies are better equipped to deal with the associated red tape and bureaucracy and implement. So basically, the fact of the matter is that we are growing still below our potential. And I think we need to figure out strategically as a country how to find ways to further develop alongside the strategic verticals like defense, healthcare security, food security, digital infrastructure, and so on and so forth. But as of now, we are running below our potential, and this is already showing in the macro numbers.
Do you see right now in current condition any improvement in Romanian economic condition with all the crisis, especially Hormuz crisis?
Again, as a country...
I think tomorrow the statistic will said that economic growth in the first quarter will be 0 minus, okay, or 1 minus. So, in this situation, do you see any improvement in the second part of the year?
It depends a lot. It depends a lot on how the inflation is going to develop. Because one of the main things that are hampering investment, for example, or even the trade in general, is the high inflation still in Romania. So I would expect a decrease in inflation to be coupled with a renewed interest in investment, and not only.
we see that the investors are afraid about the current situation, especially that, let's say, Romanian, Moldova and Balkans are near the war. It's not in very good shape. But what role should the government play in de-risking strategy investment in that country, in this country? So the government to take some risk on his balance sheet.
No, but there are ways for this de-risking, yeah? First and foremost, de-risking should not be a permanent topic, yeah? It should be a temporary way of attracting investment until the country clears the level playing field and certainty for investors for this de-risking game not to be needed any longer. And there are ways to do it, and not only in Romania per se, because at the level of the European Union for the last couple of years there have been a lot of mechanisms developed and put in place which are actually even now fueling the investment. What could be the ways? Yeah? On one hand, state guarantees. Yeah, this is very easy for the governments in order to prop up investments because they do not come with the cash flow instantly. And this should be dedicated, as I have just said, to strategic verticals like defense, digital infrastructure, energy infrastructure, and so on and so forth. Then it's co-financing. Financing by multilateral banks like European Investment Bank, EBRD. Actually, they are here and they are playing quite an interesting role, especially in what concerns the energy infrastructure development. Cash flow guarantees, like the certificates we have in the energy, to create certainty for investor that the cash flow risk is not going to be subject to political intervention or anything else. But first and foremost, we need to create the level playing field, predictability in terms of regulatory stability, fast permitting, everything that an investor needs in order to start and maintain the investment appetite in our country.
Susan? Yeah. Yes.
So this is Romanian perspective mainly that you're talking about, but actually globally, this is a very important point too, and regionally here too, is that this blended finance proposition we've been seeing since the war in Ukraine, and they're very effective, and it's not meant to replace private capital at all. It's meant to support private capital so that projects, especially big infrastructure projects, are actually bankable. And I think that's very important. There's also another point around this, is that the big, like, digital infrastructure companies and the water companies, and when I was speaking about hybrid warfare and the cable providers and things, these people are very much at risk from hybrid warfare, and in fact, many people say we are already at war in a hybrid warfare, which I totally agree we are. So who actually pays? It wasn't in the shareholders' agreement that the increase in security and the protection around these assets should be at the cost of the shareholders. And I think this is critically important, where the blended capital actually comes in, and it has to be public capital that comes in next to that, that's able to protect our infrastructure. And I think in actual fact, these companies are our new primes. Really, that's a very important way to look at it, because they're really at the front line of our defense. So they are providing our critical infrastructure. It's digital, water, energy, everything. So I agree with this.
Anca? The same question.
Support from...
Yeah, to support the government, to support some investment.
Yeah, absolutely. Government is the place where we should look at for measures to reduce the costs for investors and to increase the appetite. And yes, there are a number of measures as described here. This blending finance, so where the government could come with guarantees, with different schemes to support investors, with the idea of lowering costs and increasing appetite. As for a central bank, we have different instruments, and we are regulators and supervisors for example, in Moldova, for the banking sector, for the non-bank financial institutions, also for insurance sector. And we are trying to lower the costs of these entities, these economic operators, by implementing more digital tools when we are talking about supervision, about AML, CFT, yes, this area of fighting frauds and so on. It requires lots of instrument from these digital tools of instruments. And other costs we are trying to lower for our banks, eKYC. So that these compliance costs on Know Your Customer, on AML CFT, these are significant. Then the smaller the market, of course, the bigger the cost and the cost per client of the cost. This is why we pay enormous attention at the National Bank of Moldova to lower the burden on the banks operating on our system. And in general, we look at this, as I said in the first intervention, to make sure that financial stability and inflation are at such a level that are conducive to investments. I think also very important for regulators in such period of time is a constant dialogue with entities that we are looking for. And dialogue, it consolidates trust. And this is this feedback we receive from the market, and that having develop this dialogue with banks and insurance companies, they were stimulated to increase their investments. And by the way, last year we had another big investor from Austria that bought the third largest insurance operator in the country, and we are very happy to see that despite all difficulties and despite the difficult geopolitical context, investors are looking and are enthusiastic to come and put their money.
The crisis, the political crisis in Romania, in the case of Romania, alter the capital flow? Bogdan?
I think any kind of political turmoil brings along volatility. But it doesn't mean that we are going to see massive capital outflows or hot money going out. And basically, we should be more focused on how to keep inside and attract long-term capital in order to fund and sponsor our key strategic development areas. But again, volatility is here. We've seen it before. Most likely we are going to see it in the future as well. It's part of the economic play.
Please, Susan.
Yeah.
You have the microphone.
Yeah, sorry, if I can make a comment on that too. So a good example of that, I think, is the United States. Early on into the president's administration, things were completely crazy, and volatility was insane. Volatility is still heavily rolling, but what seems to be the new normal is to be extremely volatile, and that is very much being priced into the markets. If we look at the UK today, I don't know, I'll go back and check the news, actually, when this is over, our current Labour Party, that government may actually fall, we may be in a transition, and bond prices, of course, completely went crazy around that too. The bad news for that, if it's sustained, it means the borrowing costs are very high. So the downstream effect of that is difficult. But volatility needs to be priced into models, and I think those models, as I was saying earlier, for investors, are actually getting much more sophisticated. You're seeing JP Morgan's Geopolitical Risk Institute. I actually am a senior advisor to one of them. Erste Bank does a brilliant job at this in the region, and BlackRock just opened up a geopolitical risk model that's available to all investors. These are improvements, I believe, very much on the things that like EBRD have done in the past that I think are very old-fashioned, and they do a simple rating about who's hot and who's not. These are much more nuanced, so those models are evolving.
After the fall of the communists 30 years ago, we saw a lot of foreign investment come here in this region, Romanian, Poland, Ukraine, not Ukraine, Hungary, and so on. And right now we see some deglobalization. Some foreign investors are out, from Romania, from Hungary. Do you think this model is over?
Actually, I have
For this region.
For this region, I have an interesting statistics for this region. Foreign investors hold only 6% of CEE market cap compared to 30% actually in the US. So it's actually a very small amount, which means there's room for growth. But I agree with you. I don't actually think that shocks, like, and you're referring to really U.S. foreign policy, destroy capital flows. I just think they redirect those capital flows. So I think the capital flows would be very much intra-European and maybe a little bit of U.S. direct investment into that. So I do not believe it's over. And as I said earlier, that the CEE in particular is very well placed because of its industrial base. It's almost twice as large in terms of the manufacturing capacity than the U.S. is. The matter is at what price things can be manufactured. And I know that Romania is very attractive for this, and there's a lot of industrial
in Romania,
capacity
the
here.
industry as a component of GDP, it's 18%.
Yeah, it's huge.
It's
That's
huge.
much bigger than
In
the,
Europe, it's 14%.
in the UK, US is only 8 to 9%. So I think that's very interesting. I was speaking to, it was somebody from the NATO Diana Fund, and I asked where most of the money actually goes to for manufacturing projects. And he said, listen, we would love to, I was in Czechia, where I spent a lot of time, and he said, we'd love to give these awards to Czech companies, right? But in actual fact, 60% of the awards actually go to American companies, even though they have a smaller industrial manufacturing base. But overall, it's a very large market, is because it's done more cheaply. So I think this is something that we really have to look at closely within the EU, is the cost of manufacturing. And the further east you go, actually it gets slightly cheaper. So I think that that's a big benefit to the region.
Anca, the globalization. Do you think this model is over? No, not globalization. Globalization. Do you think it's over?
I don't think it's over. Allow me not to believe this, and I don't see really enough signs. Yes, there are discussions. We see some relocalization, relocating some investments, but still globalization was based on the appetite for, and the normal actually impulse of the private sector to find better opportunities. And as long as private sector is operating and is driven by this idea of looking for better opportunities, I don't think globalization could be put on end. Actually, as long as private sector is involved, they would naturally look for better options, and this is globalization. Of course, there are several rounds of crisis that maybe decrease the appetite of capital to go so much global and to look more into regional opportunities. And I think that the first such big shock for the capital was the pandemic, when actually everybody was isolated, the economies were unplugged, and that was the first moment when governments and investors started to talk about shorter routes. Yeah, but while we are considering also shorter routes, of course, the idea of having the benefits of a global investment and investors, I think it's still on the table. Maybe in the 90s, we would have not thought of such a new discussion, but it just it's just normal, in the current times, it's a normal discussion. I don't believe that we are talking about a regional globalization or partial, but yes, some investments would prefer to have a shorter, a closer destination. That is not a general trend in my view. It cannot be. I do believe and I do trust the private sector, and I see it every day. I see it in Romania, in Moldova, in Europe in general. Yeah, that's of course maybe we have to look at this administrative burden to make investments more fluid, more attempted, but globalization is not over in my view.
Bogdan?
We discussed about the stock market in Romania, so I wouldn't see it at peril. And on the other hand, if you look at the stock of FDIs in the country, they are mostly coming from friendly EU countries with a long-term commitment to Romania, so I wouldn't see that happening. I think capital is still coming, but we should not forget that there is a competition between investment geographies, if you want. So basically the idea is how to create enough incentives for the capital to come here and stay for long term. But I wouldn't see this deglobalization taking place as fast as you would suggest.
In the case here in Romania, what do you think will be, let's say, the new wave of opportunities?
Actually, we do not start from a very low base. If you think about it, I noted down some figures because you know that you like that. So in terms of gross fixed capital formation, we are 26% of GDP. There could be a discussion about where this money are going and how productive the investment are, but still the country is investing. And that's good news after so many years of underinvestment. Yeah? We see investment growing at an average of 5% per year between 2021 and 2025. Again, this goes hand in hand with the gross fixed capital formation. We have an observation of the recovery and resilience plans, which is not spectacular, but still, it's 1.5% of the GDP. We are somehow at 50% of what we should do. Basically, we are not the best performing in Europe, but we are not also the laggards for sure. But again, if you look at the composition of this investment, you see a lot of catch-up investment, yeah? But the catch-up phase is over. We see 9% of GDP catch-up infrastructure, 7% transport. Unfortunately, intellectual property investment, only 1% of the GDP compared to Czech Republic, which is more than double compared to Romania. So the square one is not that bad for the country. The question remains, what do we do to get to square two in a way that we should ensure that Romania in 2030 and 2035 is going to look like the country we want to look, and not necessarily the country that is today, because frankly speaking, the era of cheap labor is over, the era of cheap money is again over. The idea is how to build up again the necessary vertical in the very cohesive manner within the EU in order to become a preferred investment destination if you are still, even if you are still perceived as a sort of frontier country.
Susan, you are, let's say, geopolitical analyst, so you know a lot. Do you think Romanian can be a regional leader in terms of economic?
It can be a regional leader?
Yeah, regional leader.
Absolutely.
Why do you think that?
And actually, you know, Romania, well, first of all, its geographic positioning on the Black Sea is very, very important, and that was, you know, exemplified in the NATO base, actually, that we're going to go and see on Thursday. But also, Romania shouldn't really be looked at completely in isolation. It's part of the EU and has neighbors. It has a big trading group. So it is a benefit that it's standing on the shoulders of giants. When we were just talking about a little bit earlier about the globalization, in actual fact, if we go back a bit, and this gets back to the point about investment into Romania, is that in the 90s, these assets were very cheap. They were very cheap because they were very risky. And investors came in because we had many years of socialism. Economies were destroyed. There was no knowledge about how to run businesses. The infrastructure was completely dilapidated. But 35 years later, it is a remarkably different story. So I think that it's all about being able to price in that risk, right? And then looking at like how that can grow and deliver value going forward. So for Romania, again, as I say, because of its very strong industrial-based potential and its geographic positioning, I think it's in a very good spot. And it's also large. It's a large country. It has a big agricultural sector. There's mining. There's a lot of investment happening here now in energy. I know that America is also coming in on the nuclear energy side of things and is looking to position itself as an energy giant, which is critically important, especially that will be needed for Ukraine. Our last conference that we had in December, that's really what it was about. It was about how important Romania will be as the Ukrainian construction comes forward, and I think it will be absolutely critical.
But about that, what will be the role of Romania in reconstruction, from your point of view?
From my point of view, it would actually be its potential and its industrial base for the reconstruction. Industrial base, yes, but also its geopolitical positioning on the Black Sea, because lots of goods will have to come in via the Black Sea to Romania for the southern ports.
A lot of people said that Romania will be logistic player in reconstruction, not industrial.
Well,
because
logistics,
we don't have enough money.
yeah, but I think this is where you're going to be able to attract a lot of foreign investment, because it's within the EU. And that wall of 550 billion to one, potentially even 2 trillion that's been suggested that will go into the Ukrainian reconstruction doesn't mean it's going into Ukraine. It's going to be going into the ecosystem that will provide the value in the building for Ukraine. And absolutely, I believe that Romania sits in a very prime position to take advantage of that. Now, we talk about policy. I think policy is ultra important. Political risk also is a very big issue, as we just described. So the policy levers that the government can actually exercise to take advantage of this opportunity is going to really determine how much advantage you can make of it.
Anca, so in the case of Romania, do you think Romania can be a regional leader?
Absolutely.
Yeah?
I think.
Do you have enough money to go outside with the money, with the bank, with the companies outside Romania?
It's not only about money. It's about vision, about commitment, and about having projects that you are implementing. But I'm absolutely convinced that Romania has the potential to become bigger in the region, to become this regional leader, as you said. And we see recent examples where some amazing performance on the capital market, for example. 20 years ago, capital market we are looking up to other capital markets in the region. But right now, we see Bucharest Stock Exchange as being really a regional player and with high liquidity, with good market capitalization. And by the way, Bucharest Stock Exchange is going to operate also in Moldova. They set up a joint operation there, and we hope in fall this year to be up and running this new investment. So we have recent examples where Romania became a regional player and increased its voice and its share in the economy of the region. As concerning this proximity of Ukraine that brought some uncertainties in the first stage when the war started, but now it's absolutely necessary to be really active and to be present in the reconstruction of Ukraine. And it's not only a matter of money. Money will be available. There are public money, private money. The idea is that to be able to channel and to put on the table good projects. We have, in Romania, we have a good energy sector that could really contribute for the energy sector in Ukraine. And yes, the industrial, also the logistics, which is not insignificant. So for the coming 5 years, I see the potential of Romania being extremely high, and I think it's a matter of, I don't know, a little bit of inspiration to grab this opportunity.
What about, let's say, the threats for the second part of the year, this year and the next years, the main threats for this region? Yes, Susan, please.
You mean the geopolitical
Yeah,
threats?
geopolitical and so on.
I would be a very rich lady if I could estimate these. I mean, where can we go after the Middle East and Iran? So I think one of the big potential threats that could be in front of us is that war will drag on for a long time, and supply chains will be even more constrained than they are now. I think that's a very big worry. Personally, I think that issue will be resolved sooner than later. It won't go on for an extended period of time. And the reason why I say that, I have no insider information or no knowledge, but what I see from the behavior of the U.S. administration is what drives decision-making almost exclusively is what is in the benefit of the U.S. balance sheet. And an extended engagement and the closing of the Strait of Hormuz is not in the long-term interests of the U.S. balance sheet. So some sort of resolution, fair or unfair, will be determined.
Do you think the, let's say, west part of the world, I mean Europe, United States, can survive with oil over $100 per barrel?
Well, the U.S. is less at risk from this because they produce quite a lot of their own
Sure,
oil.
but the price is the same.
But the price is the same, yes. And that's not great. It's not great for American consumers. American consumers are up in arms about this, which is actually not good for the administration. So when you talk about survival, I think you might need to look at survival in those sort of terms.
So, main threats for the second part of the year in the case of Romania and the next year?
No, I think volatility is here to stay. The main question, the big question is how to embed within this volatility in alternative scenarios and imagine how to apply them whenever bad things like Black Swan are happening. Yeah. Threats, it's lack of discipline in executing a business decision, political decision, state budget decisions. I mean, in difficult times, in uncertain times, you need a lot of discipline to keep the boat straight. So, and we need that, frankly speaking. And from financial perspective, as I said in the beginning, a high inflation rate in Romania is going to put at peril a lot of investment decisions.
Anca, main threats. Principale amenințări.
Okay.
Yeah, main threats.
For the region.
Yeah, for the region, in the case of Moldova, in the case of Romania.
Well, of course, economic challenges are important, and the high price of oil coming from the recent conflict in Iran, it affects the entire region. Yeah, as I said, last week we had the monetary policy decision meeting, and we decided to increase policy rate from 5% to 6.5%. It was a significant increase.
Wow, significant.
Yeah, because we have to be also forward-looking, and because we consider that this crisis, of course, cannot end in a week or two.
And the politicians were not too angry about this decision?
No, I think...
And the public?
No, I think, well, I think we were able to explain that in the current context, we have to make sure that we keep inflation under control, but the current level of policy rate is 6.5%. It's similar to policy rate in different countries, including Romania. Yesterday we had the figures on inflation, and yes, it's above 6.5%. We were very happy that we managed to go below or around 5% in the last month after a shock that you didn't have in Romania. We had an energy shock at the beginning of 2025. So we fought this shock last year, and when we were again in the safety corridor of inflation targeting, then we had the pressure from Hormuz Strait and Iran conflict. So the main is, as I see as economist and central banker, it comes from economy. But of course there are the other threats, talking and looking at political regions in tensions in the region. But once you have also the economic shock in place, then unfortunately you see easier the discontent of people. So this is why we have to close these economic pressures and to keep inflation under control as soon as possible. Otherwise, population will be, and citizens in general and companies
will be very angry.
Will be angry, and they don't look at which is the reason why. I mean, they are facing a situation that is not comfortable. It's not. They are losing money. They're
Losing purchasing power.
Purchasing power is eroded every day. So they are looking to the governments and to the officials, to central banks, to find those responsible for this. So we have to fix this as economists. But of course, probably experts in diplomacy, they have their point of view. This is important to have these discussions where people from various angles and sectors of activity are putting their minds and best thoughts together. So let's keep an eye on the economy to make sure that we manage our economies as good as possible under current circumstances.
If you have any question, here, 1, 2, 3. Any kind of question? Who will win Champions League this year? So, if you want to ask each other some question, what would be your curiosity to Anca? Bogdan? Yeah. To put a question. Yeah, Susan.
I'd be interested to know on your loan book, what sort of credit are you providing to what kind of an overall, like industrial companies, telecommunications companies? Where is that flow going to in terms of debt?
I think as a bank we are quite well balanced, and we always want to have 4 engines running actually. It's the SME, it's large corporate, public sector, and we are quite a player in commercial real estate finance. But otherwise, in terms of corporates, it's very well dispersed. We have exposure in agribusiness, including food processing. Actually, we are quite keen on food processing. Yeah, construction, because it's fueled by the ongoing infrastructure running around, energy as well. So it's a very balanced mix.
So, Anca.
Yeah, I would have a question for Bogdan. And as I fly to Chisinau tonight, so as a banker, so what would you think a central bank should do these days in order to make the life of banks easier, actually?
I think at least in Romania have quite a solid regulator, and they should continue to do whatever they are doing. Yeah, bigger regulation is key. I mean, in banking you need two things. You need capital and reputation. Yeah? They go hand in hand, and you cannot live without one of them. And I think what our regulator does quite well is to create the right balance and the right level of capital and the reputation in the system. And that's important because banking is based on trust. We're doing business with other people's money. So yeah, it's key to have this capital and reputation in a well-balanced mix.
So, thank you very much for your presence, for your comments. Let's applaud them, and then we close this session.